This is a weekly breaking Forex news update from Horse Forex. For more information, visit our website at www.horsegroup.net. FTSE 100 holding on to moving average support after choking UK data. The FTSE 100 has lost nearly 8% this week and given back 3 weeks' worth of gains as risk markets around the globe turn sour. Fears that the U.S. may see a second round of the COVID-19 virus prompted the Dow Jones to fall by over 1,800 points at one stage on Thursday, dragging global indices lower. In addition to the global risk-off move, the latest UK GDP figures will also weigh on the UK big board. UK GDP fell by 10.4% in the 3 months to April and by 20.4% in April alone. According to the ONS Deputy National Statistician for Economic Statistics, Jonathan Athow, April's fall in GDP is the biggest the UK has ever seen, more than 3 times larger than last month and almost 10 times larger than the steepest pre-COVID-19 fall. British pound GBP latest. Record GDP collapse. GBP USD dips. The UK economy had its largest monthly contraction on record in April, with GDP crashing 20.4%, which was more than 10 times steeper than any pre-COVID-19 fall. In turn, this highlights the devastating impact of the government lockdown in response to the spread of coronavirus. Given that the economy began to reopen in May, the worst looks to be behind us. That said, this likely underscores the fact that the Bank of England will look to boost its QE purchases by at least GBP 100 billion next week. The immediate response has been somewhat muted in GBP, with the currency dipping slightly. EUR USD falters as COVID-19 cases surge. U.S. stocks may recover. Follow through from last night's Wall Street session was evident early in Asia trade as the haven-linked U.S. dollar and Japanese yen continued to surge while S&P 500 futures plunged alongside the risk-sensitive Australia dollar. Appetite for risk seemed to return after the first hour of trade in the Tokyo session, as risk assets began to retrace early losses. U.S. Treasury yields moved higher, followed by U.S. stock futures as the yen plunged after Japanese industrial production declined to the lowest readings since 2011. Looking forward, UK GDP and balance of trade data headline the economic docket, with GDP expected to shrink 10% in the 3 months to April. USD, S&P 500, and more. Charts for next week. U.S. dollar index, DXY, shot higher yesterday as risk-off gripped risky assets amidst renewed uncertainty with the coronavirus and the economic outlook. The bounce is coming off a trend line running higher since 2018. And if the momentum is any indication, the bounce could quickly morph into a rally. Look for the 95.72 low to hold for more upside towards the 200-day MA and higher to develop. A break below the low and trend line will put even more pressure on the dollar, with DXY 94.65 eyed as the next level of support. The S&P 500 got crushed yesterday. It was the type of turn after a rally that suggests that there is more from where that came from.